Today, ADAPTCrypto will be hosting an AMA with Alexander from the ChainX team. For those who haven't heard of ChainX, it is a gem within the crypto space, and we hope to outline some of those excellent features to you guys. Alexander, welcome to the channel. Thank you for taking the time to sort of, get to know us and share your story about ChainX. Mate, tell us a little about yourself, your position within ChainX, and some of your responsibilities.
All right. Thank you for hosting me to begin with. I'm a counselor and I'm an ex-association member. That means that I kind of direct the community in a sense. But above those positions, I take pride in being a community manager. I basically manage the overseas community. That means everything in English. The community managers that do the local communities, such as French or Polish or German. And I take great pride in that because we've created a community that is on the same sort of wavelength as the dev team and as the rest of us. And we're all looking into how is ChainX working? How can we improve it rather than, what are the comparisons or why is the price moving up? Why is the price moving down? That's kind of, that happens, but nobody focuses on it. It's all on the tech. It's all on where we're going with this. And I love that.
Yeah, that's some really good points there. I can see why they've chosen you for, this sort of role. You're well spoken and well presented. So they've chosen well, and it's some interesting points there, mate. Tell me, what do you love about ChainX?
That kind of dawns on, that community again, because both that community and within that community, I include the dev team, and I'll get into that later. The community and the dev team, they all have this rigid eyesight on the next 10 years. They're looking at, where do we want to be in 10 years? Where do we want to be in 5 years? Something that is very uncommon in crypto, as people are always looking at, in the next bull run or the next year or the next month. But they're very set on make ChainX amazing and the rest will follow. But that translates itself into the community as well. Whenever we have people join the community, join the project, they're like, yeah, okay, price going up. I want my staking rewards. But eventually that sort of translates into a more muted idea of, wow, this is actually pretty cool what they're doing here. Like, they change their mindset somehow into that same long-term thinking. And that's something that I love seeing happen again and again.
Those are very reassuring points there. A lot of people, a lot of project developers, they always seem to state like their dream, and they're like, we're going to achieve this. And sometimes their dreams are very short-sighted. I think you sort of raised a really good point there. You also, it sounds like you're breaking down that plan from not just a dream. It's, you've set the interval there halfway, and, what you need to achieve in that time, which is, really good. Talk to me. Polkadot has a very confusing architecture, and it's one of the most. I dare say it's probably the most complex architecture structure as to how everything works. Tell me a little bit about how ChainX and how it's sort of going to function on the Polkadot ecosystem, and maybe talk in layman terms, so the mums and dads and people as simple as me.
That's going to be difficult. I think starting at Polkadot is a good starting point for this, as it kind of is the base layer of what every Polkadot parachain is doing. If you want to start at the very beginning, it's like an empty blockchain. It's an empty blockchain that does nothing but make new blocks. And on top of this, you can build your own things. Polkadot chose to build that out into a sort of relay chain. And what do they mean with that? Simply put, it is a chain that, creates new blocks like every blockchain does. But within these blocks, what it contains is messages. And it is messages from one location to the other location, from one parachain to the other parachain. It relays the message from A to B. And that is their very core simple function that they've built on top of this template, this skeleton called Substrate. If you go a level higher onto that, you could, for example, take something like ChainX, which is also built on Substrate and which has taken this same template and built something on top of it. They've made for example, a modernistic house with a modernistic design, with lots of black and white, that some people like and some people don't. But they filled it with their own ideas. And where Polkadot is a relay chain, and it moves messages from A to B. ChainX has chosen to use this template and fill it with bridging stuff. Now, what do I mean with bridging stuff? I say stuff because it's a very broad term. They are bridging Bitcoin into this substrate form of blockchain. Take wrap BTC, for example. It is basically the same thing. Unlike wrapping it on Ethereum, we're wrapping it on substrate. And by wrapping it on substrate, it allows it to be used on any substrate chain because it's the same language. It's like we're talking English to each other now instead of talking French and English to each other, which would, complicate our communication a little bit. So in that sense, to summarize a little bit, you have a layer of substrate, and on top of that is Polkadot, and Polkadot then has all these little blockchains on top of it that create the Polkadot ecology. And we're one of those little blocks that kind of connects with the remote blockchain called Bitcoin. And we take those Bitcoin in, we lock it on the Bitcoin blockchain, and then we hand you a substrate version, a wrapped version of Bitcoin on our blockchain. And in the future, once Polkadot actually is fully built and we have all these parachains that are connected and you have all these blocks on that layer and there's actually a link between them, you could move that XBTC from here through the relay chain to there. And you could use it in a different parachain, such as Akala, for example. Akala is another substrate-based blockchain that can connect to the relay chain that is Polkadot, and through that, ChainX and Akala can communicate. You could use XBTC as mortgage for a USD, Akala stablecoin, for example.
Some other projects do something similar. I see you put out the advantages of doing things on Substrate as well, and how that benefits an ecosystem rather than some of the alternative methods. I am tracking that for Tether to move along the Ethereum network, and how that sort of really congests the Ethereum network itself. And I think from what I could sort of gather from some of those points there was that because everything is on Substrate and they're all using Substrate, you're giving utility and it's frictionless. Am I touching the right points there? Does that sort of sound right? Yeah.
I think the easiest way to imagine it is what USDT is doing right now, especially in its ERC20 form. You have one blockchain, you have one row of all these little blocks, and you have one row in which you do everything. Now, there's an Ethereum transfer here, there's another ERC20 here, there is a USDT transfer here, another USDT, etc., etc., etc. They're all in one line. Now, instead with Substrate, where you can have all of these different chains that talk in the same language, that are synced up all to the same timing of their blocks, almost, you could have a chain for AUSD, or say USDT if they were to make a substrate version. You could have a chain for USDT, you could have a chain for XBTC, you could have a chain for PCX, you could have a chain for Polkadot, you can have a chain for Kusama, and they're all working at the same time. So as Akala is making a transaction from A to B, USDT is making a transaction from A to B at the very same time. So you have basically a very large amount of change you can all run at the same time that sort of exponentially increase your transaction per second.
That's excellent, mate. I could definitely see the utility. I think, we're starting to see, the Ethereum dad bod, so to speak, really show with some of the, congestion on its network and its scalability. And I do know they're fixing that sort of stuff. So it's interesting to sort of see, and I do want to dive in more a little bit later about its tokens utility sort of comes in. Mm-hmm. I know you have touched on it, but let's keep going. So, talk to me a little bit about the PCX node structure, its consensus algorithm, and the incentives for some of the node providers.
Substrate being Substrate, it is a skeleton, it's a template, and a project can choose to use a different consensus mechanism. But we've in that chosen to basically just outright copy Polkadot because they have created something that is useful and fast and kind of is the best of both worlds. And it's going to get a little bit technical here, but bear with me. I'm going to try and explain it in simple terms. The way a blockchain works is that it creates block upon block upon block upon block. But there's multiple people creating these blocks at the same time, and how do you say, okay, that's the block we're going to follow, and then that block built on top of that is what we're going to follow. And the people that, chose this block here and did that and then that, we're not following them. How do you make these choices? How do you make these choices fast so that when a transfer is made, it becomes final? You see that, for example, with Bitcoin a lot, you need to have X amount of confirmations before we say, okay, this is now final. The consensus mechanism that Parity, the team behind Substrate and the team behind Polkadot, has come up with is a babe plus grandpa algorithm. Yes, I know what that sounds like, but hey, what this means is it is basically two algorithms. One of them decides, okay, who is next to create the next block, and the other one decides, when do I call the blocks final? Now, by splitting these things, you get one side that makes sure that the blockchain keeps running, and the other side that makes sure that the blockchain becomes final, and that we're all on the same page, basically, and that we're not, splitting into forks accidentally. And that works in such a way that there's only 2 or 3 blocks, each of roughly 6 seconds, until something becomes final. So you have a block time of 6 seconds throughout all of these parachains, and after 18 seconds, 20 seconds, roughly, it becomes final. Your transaction is done. That's it. And at that point, you cannot go back into the blockchain. You cannot, you have that finality set. On top of this, you have the nodes, and the nodes are then, as in with any proof of stake chain, you have the nodes that create blocks, and you have the nodes that simply follow the blockchain. The nodes that create blocks obviously have to, be a little bit more carefully managed, because they are creating the next block and they need to keep up with those 6 seconds so that we can all move along at a certain speed. So there's multiple ways of incentivizing these nodes to perform well. We, unlike a lot of proof of stake chains, have chosen to incentivize both the validators and what we call them candidates the same. So if a person has a little bit of technical knowledge, is like, I want to support this project, I want to run a node, then he can. And he can for as little as 10 PCX, which right now is 100 USD top of my head. And he can run a node, and he can join the consensus, he can sync along with everybody else, and he, decentralizes the whole network. And he gets rewarded exactly the same rate as a validator node, which might, for some people, come off as, but isn't that a little bit unfair against the validator nodes who have a greater responsibility? Yeah, maybe, but the validator nodes also get transaction fees from the blocks that they produce. But we want to create a sort of safe space in which everyone can join the consensus and not have, to wait and lock their funds for X amount of time until they finally become a validator. We much rather have everyone, joining at the same spot, at the same level, where they can all decentralize the network and where they can all share in the spoils of the network.
Yeah, that's some really interesting points there. I see the advantages there of getting rewarded for some of the transaction fees, although they might seem small, while ChainX is still relatively small. But if you have a look at the Ethereum network, miners are making some of the top end nodes that are set up. And I know there's very different architecture here, but they're earning about $200 per day from the rewards, right? But there's another $100 on top of that from just the transactions alone. So that's the potential essentially from these validator nodes. And I think anyone who holds those validator nodes now, or have their validator nodes set up, understands the potential there. So but let's take it back a step. Talk to me about how you guys, when you launched, right? My understanding that there was no pre-sale, sort of similar to what Bitcoin was. So talk to me a little bit about that. I find that very exciting. It sounds like it's what some people call a fair launch.
Ooh, a fair launch. Well, I mean, that becomes a little bit of a debate when you start looking at governance, but we'll get to that later. So we take pride in the fact that we didn't have an ICO, we didn't have a pre-mine, we didn't have a pre-sale, we didn't have seed investors, we didn't have any of that. It's all community. Basically like Bitcoin. The tokenomics are also like Bitcoin. And the network was kickstarted with people. This is going to get a little bit confusing for some people. Imagine you sort of link a Bitcoin wallet with your ChainX wallet address. You sort of link those two. And let's forget about the magic behind the screens. It's just fact. You link them. And as you put Bitcoin in that wallet and you press lock, you hold Bitcoin in that wallet that you never touch it. And as long as you don't touch it after that initial deposit, on the ChainX chain in that wallet, you will receive PCX because you are now taking part in the mining for PCX. Such as with Bitcoin mining, it is now a sort of asset mining. By holding assets, you are mining PCX. Now, that was used to sort of kickstart the network and to reward people. The same was done with DOT, the very, very first version of DOT. On the ChainX chain, it was called Shadow Dot because it was an Ethereum version of DOT. That was the very first, sort of seeding round, if you want to call it that. And you could similarly link your Ethereum wallet that had SDOT in it with your ChainX wallet. And with that, you had assets, and you had assets to mine PCX with. And as DOT wasn't transferable at that point, you would have a certain amount of assets that you could mine PCX with. And then as PCX was mined into existence, people could stake that PCX, and with that PCX, also participate in mining. So it kind of became this compound investment, basically, this compound interest on compound interest, et cetera, and it grew larger and larger. And that's kind of where the disagreement with fair launch comes in. Even though we never sold anything, a lot of people do not really like it because this means that the people that joined the soonest will have the most PCX. And you can now see that in our current form of governance. A lot of these very early participants of the community now have a huge amount of PCX because they joined in so early, and they therefore can kind of, sway these votes in their way. And a lot of people do not understand how the on-chain governance works. For some reason, on-chain governance is still a very weird concept to people, whereas it's nothing more than saying, I agree with this, but with my entire stack of PCX, or I disagree with this with like half my stack of PCX. And you don't pay anything. You just say, this is the weight of my vote. But because people don't understand it, or people are not aware of it, or people don't want to read about it, you now have a situation where not a lot of people are voting. And the people that are voting but that joined later and thus have a smaller amount of PCX are kind of outweighed by the larger PCX holders.
This is the advantage, right, of getting in early to these projects. Yeah. And it's sort of good to sort of see, these people built up their stacks purely by, getting in early, following the system that was implemented by you guys. It's not like some, rich kid has come along with daddy's money and bought it all and had an unfair advantage from the get-go. So let's talk a little bit about the utility of your token. I understand that PCX is used as collateral for XBTC. What other utility does PCX token have?
Eventually, you need to look at it like Ethereum is used for making ERC20 transactions on the Ethereum chain. You pay your gas fees in Ethereum. PCX works the same. Eventually, it is nothing but a token to maybe hold some value for some people, but that's not its main goal. Its main goal is to pay transaction fees, participate in governance, as in, where are we going, where are we heading, what do we do, what do we not do, and it's used as collateral. For those of you unaware, there's a limited amount of BTC that you can bridge over into ChainX, because as a vault that holds Bitcoin and allows you to have XBTC on, wrapped in substrate, you have to put up a certain amount of collateral. That is in PCX, or in the future, once the parachains are all connected, that will be in DOT, or in any other currency and substrate, because that is all substrate. Now that would be possible. And you put that up as collateral, meaning it is locked, and you get rewarded for that, obviously, but that allows people to then deposit BTC, and you are holding that BTC for them, together with all the other vaults and all the other people that have collateral of PCX. And I think those are basically its main functions. Eventually, as the project grows and as we have kind of solidified this foundation as, bridging project, you get from that little core, you get all these bridges to all these other blockchains. For each of those tokens that comes in, you need to have PCX collateralized, and you need to pay transaction fees in PCX, etc. And that's kind of where it starts to shine in my eyes, because that's eventually what it was made for.
Yep. Yeah, 100%. So I was reading through your website, mate, and I found something that was very interesting. Can you elaborate on ChainX being the only substrate deflationary coin with an APY of 42%? How is that deflationary?
It's an interesting question because it depends on your perspective of deflationary. Sure, it has a definition, but it really depends on, with which eyes you look on the term deflationary. Bitcoin is deflationary in the sense that its value will go up every year instead of, fiat currencies of which the value goes down every year, simply because it is limited at a certain max, 21 million Bitcoin. But the current situation for Bitcoin, and thus the same for PCX, is that there is still more BTC being mined, more BTC being generated, so therefore it inflates in its amount. There is more Bitcoin being created up until that 21 million mark. And until it hits that 21 million mark, it is technically inflationary because there's more being made. And the same works for PCX. Up until the 21 million, there will be more being made, and there will be a sort of inflation rate. So can you call it deflationary? That depends entirely on your perspective on whether you call Bitcoin deflationary. In my eyes, personally, I suppose, yes. Then how does the API work at such a high rate? Well, similarly to what Bitcoin had in the early days. Even though PCX now is not, it's not mined by miners that work on creating a certain hash and having these computational tasks in simple terms, but instead they are sort of like chosen. Now it's your turn, now it's your turn, now it's your turn. The way PCX works is that every 5 minutes compared to every 10 minutes for Bitcoin, 50 PCX is made. And those 50 PCX are shared over PCX stakers. They are shared over the team for now. They're part of the treasury. So the treasury is also part of that governance system. And then part of it goes to PCX stakers and part of it goes to X asset holders. X asset holders, in short, XBTC holders, and in the future, X ZIL or X FIL or X LTC, that kind of stuff, that category. And they then together sort of fight over those 50 PCX. So every 5 minutes, when 50 PCX is created, it gets shared into a portion here, a portion there, etc., etc. That creates the current balance in which the current PCX staker with 100 PCX earns 0.12 PCX every day, roughly. That equates to something like 80% API, is what most people would say. Simple compound interest, right? Not entirely true, because if you take into account that with the PCX supply increasing, your share of that total amount of PCX becomes less, so your share of the 50 PCX made also becomes less. So eventually over time, that flattens out. So taking that into account, the increase of supply, you would end up on roughly 42% API, which is why it's so high and still deflationary.
It sounds like the core development team here is fans of Bitcoin. You've used some of their models, and it's good. It's great. Now, so you touched on the treasury a little bit, and we've talked a little bit about governance. Sometimes it does sound a little bit political. Tell me about the governance model, and I'm going to throw a bit of a curveball in here. Tell me about the most interesting vote that's been passed, or maybe a vote that interests you that's passed so far.
We actually had one recently, which caused quite the upstir. And kind of created two camps, not in a bad way. It's not like one half of the community hates the other half of the community or anything, but it did create a little bit of a discussion, rather a political discussion. I think you're not wrong in that. In its essence, governance is nothing but a way to vote on a change. Within the blockchain, within Substrate, there is a little module, which is the governance module. and that governance module can change parameters within the blockchain. I or you or anyone else with PCX could propose a change. That's what one of the counselors did recently, where they said, you know what, we now have a system in which it only takes 3 days after you unstake to get your PCX, free, so you can transfer it out and sell it on the market, for example. He argued that that should be changed to more like 14 days, for example. Now, what would this mean? If you stake your PCX, you get rewards, and if you say, okay, I've staked enough, I want to sell it because the price has doubled or the price has gone down, and I want out. You can say, okay, I want to take it out of staking, and then as you do that, you kind of move it out of the participation in mining PCX, so you no longer receive rewards, and it's then locked for. Before it was 3 days, and then after 3 days you could unfreeze it and you would have it back in your wallet. You could send it out and you could sell it, up to you, or you could stake it with a different node, or you could do whatever. Now, this counselor argued, with what's happening in the market and with how much PCX there is and how low the volume is, etc., etc., I want to change that to 14 days because that challenges people to think about how much they want to stake, such as that swing traders, for example, that like to play with the market, so to speak. They would then not be able to stake all of their PCX and receive rewards for that because they would then miss a market movement if they have to wait 14 days. So what he did was he went into his wallet and he checked the governance module and he simply selected the value he wanted to change. And he changed it from 3 days to 14 days, and he pressed OK. And that sent a proposal into the blockchain. And the blockchain said, OK, the next slot for a referendum, this proposal is going to come forth, and then we'll have a vote, and we'll see whether it will be changed or not. And that time came, it became a referendum, and people were able to vote. 7 days long, the voting was open. And you could cast your vote yes or no, 14 days or no change, 3 days, and use your amount of PCX as a sort of weight for that. And it was voted through. So the system said at the end of the 7 days, it tallied everything up and it said, okay, good, this has passed, we are going to make this change. And then an enactment period starts. Now, what is an enactment period? It is sort of like a waiting period in which the losing side is free to sort of unlock their PCX that they used for voting. So during the vote, your PCX will be locked so that you can't move it out and sort of have a ghost vote of sorts. So you can't move it out of your wallet. It will be, stuck there. But after the referendum, or if you remove your vote, you can still freely move it. That's up to you. But during this enactment period, the losing side is free to unlock their PCX and leave the system if they disagree with the change that has been made. The winning side will be locked for that enactment period, and during that period they cannot move out, and they can only unlock their PCX and sell it if they want to after the change has been made, because they chose to make this change. And then after the enactment period, the change is made. That's it. Now, this caused quite a stir because a lot of people didn't like it. Like, a lot of people argued that free market and freedom of using your PCX was more important, whereas other people argued no, because having these 14 days is going to create less people that actually stake their PCX, and then the swing traders cannot both get insanely good API and play on the market at the same time. If they want to, they'll have to make a choice which rewards long-term thinkers. And there was a lot of arguments for and against, and I actually went and picked up a lot of the arguments, made a little article about it on our Medium where people could form their own opinion about it. And now somebody else already put a proposal up to change that 14 days back to 7 days, because that's how governance works. You can put a proposal up and it will be put in the queue, and the next referendum slot, that proposal will go through. So now we have a proposal running for 7 days, and people are able to vote on it. Should we change it from 14 days to 7 days? Yes or no? And that's how it goes.
That's great, mate. To be honest, like these sort of things, you can't accommodate for everyone.
No,
And yeah, if they really want it, I guess just have to buy more tokens to gain more
pretty much,
influence.
yeah.
Um,
Which is an interesting thing, to touch on what we discussed earlier. If you buy more tokens, that doesn't necessarily mean you're going to, win with your side. There is a little mechanism that prevents overloading your side with an immense amount of PCX. Say a whale says, I want to make this change, and the entire community, everyone else that has PCX, is completely against him. Say that happens, and say this person puts up a lot of PCX and he wants to change it to half a year of waiting period after you unstake. Imagine, right? Hypothetically speaking. Now, say he makes that, he proposes that change, and it comes up to a referendum, and he puts his vote in with his boatload of PCX, and he says, you know what, I want this, so we're going to do it. Now, there is a little bit of a catch to that system that sort of prevents this from happening. Normally, when you vote on something, it is the usual, 51% has to agree and we'll do it. That is sort of true in a situation where very little PCX is used to vote, so which is called a turnout. So how many people go to actually vote? Say you have 10 million PCX and only 1 million PCX is used for this referendum. You then have a turnout of 10%. In these situations where there's a low turnout, the system sort of changes that 51 to 49% to sort of 80 versus 20%. Now, what does this mean? This means that if not a lot of people vote and not a lot of PCX is used to vote, the system balances it so that you need a high percentage, say 80% of people within that vote that need to vote I in order for the change to actually happen. If more people vote, and if, say, 9 million out of the 10 million PCX in circulation is used to vote, that ratio goes back down to the normal 51-49, because you now know that the entire ecosystem wants this change or doesn't want this change. Whereas if it's just 10%, you can't really let those 10% decide for the rest of the ecosystem. So in order to change something, you'll have to have a very high ratio of people that say I, which is sort of to prevent people from making sneaky changes where they don't notify anyone, where they don't make a campaign of, hey, I want to change this, vote with me, and sneakily change things.
Yeah, nobody likes sneaky changes.
No.
I could see the use case for that. That's excellent, mate. If the tokens are on an exchange in a hot wallet, can they still vote?
Nope. For the very simple reason that it is not your wallet. There is this saying that I keep echoing again and again in our community: not your keys, not your coins. For the very simple reason that if it's not your wallet, because in this case the exchange owns the wallet, they're technically not your PCX. You just have an account with this exchange, and the exchange, says that it's yours, but they're not yours. If you want to actually vote with this, you need to put it in your own wallet, go into the system as your own person, as your own private key, and with that you can say, hi, I say yes, or I say no, aye or nay. You can't do that from an exchange because the exchange has one or a couple of wallets, and it can't put half of it here and half of it there using one wallet. It would have to make exactly the same amount of wallets as it has users, at which point you could probably have the users make their own wallets.
That's great, because you're encouraging good practices there too to the community, and
yeah,
some people just don't know this as well. Like they essentially, what they see on these exchanges is that it's essentially just a user interface that sort of emulates what's sort of shown on a spreadsheet.
Yep.
And if it's on an exchange, maybe this exchange is doing a lot of voting from its wallet, possibly.
They could.
Let's talk about SherpX. I wasn't familiar with it until I read a little bit into your white paper. Talk to me about the relationship between SherpX and ChainX.
I'm sure a lot of people viewing right now will know about Polkadot and Kusama, and most of those will probably have had the question, what is exactly the, relationship between the two? Are they brothers? Are they the same? Are they just, is one a test net or is it an actual chain? Kusama is actually a chain. It actually has value. It actually has a reason. The idea is that Polkadot is sort of like the main system in which all the stable projects, all the things that have to, have a place for the next 20, 30, 40, 100 of years. And then Kusama is sort of like the crazy brother that is a lot faster, that does a lot more testing, does a lot more experimentation, and that does a lot more, more of the crazy things.
Takes the risks.
Exactly, he takes the risks. And what this pans out to is that because they are in their core exactly the same, now what this allows Polkadot and Kusama to do is create a canary network. You might have heard that term before. The canary network is the network that sort of warns for problems or changes or something. If something is broken, you will first see it in Kusama. It is sort of a test net with financial incentives, a test net with real world consequences. What they're doing now is they are in a test net, your traditional test net with, testnet tokens that don't really have any value, and they're playing with connecting the chains, and they're sort of having a grand rehearsal of how it will work eventually. And then from that, they do the same testing, but on Kusama for Polkadot to see, okay, we've created this, we've created this module. Does it work? In testnet, it does. How does it work when there's money on the line? And they deploy it to Kusama, and then within the Kusama community, you can, get a real life view of how does this module or how does this change pan out. And then if it is a positive, consequence or a positive outcome, Polkadot can say, okay, we'll also make this change in the Polkadot code as well. SherpX and ChainX have the same relationship. SherpX is a one-to-one copy of ChainX, and it will have the same functions that ChainX does for DOT, but for Kusama. It will be our canary network.
Alex, mate, talk to me a little bit about the positive responses within the ChainX community, how they sort of stepped up and really sort of influenced your community, and what are some of the things that sort of really stand out within the ChainX community?
The community actually, at some point, we have this very talented individual is able to sort of mix and match certain things where you have, an astronaut with the ChainX icon over it, but then, a little bit next level, I'd like to say. And he came in at a point where people were a little bit worried about where the project was going, and the price had gone down a little bit at that point. You have all this negativity, and he kind of came in with this little video, this small little video of your Chinese koi pond, and then it kind of panned towards 3 pandas doing karate on one of these rocks just above the water, and then it just said stake, earn, relax. It's gonna be fine. Something like that was really, really fun to watch, because it gave the community such a sort of reset into, it's going to be fine, relax, it's going to be fine, we're all going to be here next year. And he made more after that, and it's now become kind of a thing where if we have another person who is sort of like our curator, and he just grabs all the information that is being thrown in the Telegram about ChainX, and he made this library of things.
That's great, mate. Looking at your roadmap, ChainX has some upcoming auctions for both Kusama and Polkadot. Polkadot being the latter of the two. Can you talk to us about this process, how it's important for the project and the community?
As we discussed before, the whole substrate idea is that you can talk to each other, and these blockchains can relay messages through Polkadot, and in essence then also through Kusama. But in order to do this, you need to sort of have that connection, because something like this hasn't really been done before. The Parity team, the ones behind Polkadot and Kusama and Substrate, are currently running a testnet called Rococo, and it is a sort of shared testnet in which all the parachains actually get connected to this testnet. And we've already had a couple of parachains get this connection to that, relay chain and actually send messages to each other. Or like messages, as in transfers, or a transaction that was created on one chain, sent through the relay chain, and then accepted on the other chain. So that happening and that validation of everything that we've been coding works is really exciting for the nerds in us, but also exciting for the community in the sense that this is actually going to work. We're actually going to have parachains that can connect and that can talk to each other and that can do things together. Now, in order to translate this into a real world situation, Kusama will be first, and Kusama will be the first to say, okay, now for this time, for realsies with actual money, let's have, a parachain connect. Now, how do we choose which parachain to connect first? That's a difficult one because there's a lot of parachains, and I'm not talking about just ChainX. I'm excited about a lot of parachains, a lot of Polkadot projects that have amazing ideas and have amazing products that I all want to see connected to Polkadot because it's going to make, or to Kusama, because it's going to make this whole Polkadot and Kusama ecology incredibly strong. But where do you start? Where do you choose? You can't really, you can't choose between your own children. And so the Parity team decided, what, we're going to have auctions. Now, to not get into the details of how this auction is going to work, in technicals, but to keep it simple, imagine you're sitting in an auction room with, all the other people that want to buy, that car at the auction. It's a similar situation in which you have an auction time in which you can place your bids, and eventually the one that comes out as the winner is the first one that gets to connect. Now, what does this mean? It becomes a sort of staking. So the project or the projects that want to connect, they kind of, put up their bid of X amount of DOT or X amount of KSM for a certain period. And what you are basically buying, sort of, is a lease period. So Polkadot and Kusama each have a certain amount of capacity for parachains. A lot that I've been reading myself is sort of around that 100 mark. So with current technology, with the current size, they could take up to 100 different parachains, which means that a lot of Polkadot projects will be connected to Polkadot or to Kusama. So for those of you watching, is ChainX going to get a parachain slot? Is Plasm going to get a parachain slot? Yes, it really depends on who's first. And who is first depends on how much DOT or how much KSM they can amass. ChainX, for that matter, we're still kind of working on how exactly we want to, approach this. But even though we don't really have a lot of public information about it, I am comfortable saying that we'll be using something where people can lock their DOT and they can lock their KSM in order to support SherpX or to support ChainX within the auctions, and hopefully become, maybe one of the first parachains to actually connect. And the rewards for that will be, revealed later, but obviously there will be rewards for that because you're not gonna, lock your DOT or your KSM somewhere and not get anything in return. But how much that's going to be, how that's going to work is all, we're all still kind of fine-tuning that ourselves. And that then leaves it to the actual event. The auctions themselves, when are they going to happen? Hey guys, when is the auction going to happen? When is the auction going to happen? When are we going to, connect to Kusama? When are we connected to DOT? I hear that question or those type of questions a lot, and I don't know. That's up to Parity. That's up to Kusama. That's up to Polkadot when they feel ready. When we made the roadmap, we set it at the dates there because that's where we were expecting them to be, given the steady progress of Parity, our own progress on the whole matter. Now, more recently, the progress in the Rococo testnet. So we're expecting them to be around that time. We just don't know whether they will. And that will all be up to Parity to choose, okay, and this is when we're actually starting this. So it's kind of a waiting game at that point.
It's exciting. And I wish you all the best for this. I think it's a really good idea to sort of get your community behind you to potentially support you guys in having a little more weight essentially to at these auctions. So I think that's good. They all of a sudden they're more invested, and they'll put more time in to sort of be more involved, I guess, with what ChainX is doing. Let's go down a little bit further down the roadmap. XBT, once it's on the Polkadot system, things are going really well. It's sort of, quote, there's more to come in the future. What cryptocurrency would you like to see ChainX bridge into the Polkadot ecosystem?
I don't think I have a direct preference necessarily, but I think something with, a high market cap, such as, I don't know, Bitcoin Hash, Litecoin, ZEC, for example, things like that, because they open up these projects to, more. They open them up to DeFi that ChainX is going to create. They open them up to the DeFi applications that the rest of the Polkadot ecology is going to create. And it sort of unifies cryptocurrencies. A lot of people have actually asked me about, okay, but why not Ethereum? Or why not Tron? Or why not any of these change? And I kind of want to touch on that real quick, because there is two types of bridges. One bridge is a purely smart contract bridge, and the other one is a sort of a ferry, more like a ferry between two sides of the river. Now, ChainX is the ferry. And for example, Darwinia would be the smart contract one, the one where you can get the one-on-one connection. Darwinia, as far as I know, is working on sort of bridging, or more like connecting, Ethereum to Polkadot and Tron to Polkadot, and create a sort of bridging system where you have Ethereum in a substrate form on substrate that you can then move around, such as XBTC is a substrate form of Bitcoin, but they're doing so purely through smart contracts, which is good because it makes it completely trustless. But that liberty doesn't extend to chains like Bitcoin, or chains like Bitcoin Hash or Litecoin or ZEC, because these chains are non-Turing complete. And that's where the ferry sort of comes in. So because they're not Turing complete, they are unable to communicate. They are literally unable to run smart contracts, because you cannot put anything you want on it. If it's Turing complete, for those unaware, Turing complete means that you can, within that machine, within that creation, you can get as creative as you want, and it will work within Ethereum, because Ethereum is Turing complete. It allows it to run code. Bitcoin isn't. Bitcoin isn't Turing complete, so you can't put a smart contract into Bitcoin saying, when he deposits it here, then it automatically, sends that information somewhere else to a different blockchain, and it doesn't work like that. So we had to come up with something else. And what we've created is a sort of, we've integrated the Bitcoin Lite node, which is a sort of, kind of like a node for Bitcoin that keeps track of the blockchain. And we've integrated that into ChainX so that we can record when a deposit is being made to one of the BTC addresses. And then as that happens, we can record it with that Lite node, and we can, within our own system, say deposit has been made, it's been done with this PCX address, so this PCX address gets a 1-to-1 of XBTC. For the duration that Bitcoin is then locked within those wallets on the Bitcoin chain, with the Lite node kind of, keeping track of what happens. But there is some trust required, because you can't automate the reverse. Depositing is completely automated because we can listen what's incoming, but we can't send operations to the Bitcoin chain. So eventually there will always have to be somebody that presses the button and actually sends the BTC back out. And the same is true for all of these non-Turing complete chains, because they don't have smart contracts. You can't make it, all automated. There has to be some level of manual labor, actually. But what we've created is a way to minimize this manual labor into a system where you have multi-signature wallets, which are rotated between all of these vaults, which are all of these people that, you know, have their PCX collateralized, etc. So that when somebody withdraws, they burn their XBTC. The system recognizes this, and the system then, you know, opens up the transaction to be made, and all of these vaults have to, you know, put in their little key of their, you know, multi-signature wallet to actually send this BTC out. And that's something that will always have to be there because, you know, not Turing complete. That was actually a lot longer than I intended, but I think it's you know, important to touch on this for people looking into the whole bridging technology thing. There is a distinct difference between bridging to a non-Turing complete or a Turing complete chain. And what ChainX is focusing on is the non-Turing complete chains. And what we've created now, or we are still, you know, improving on, is a sort of modular system where we can open up to more blockchains by simply copy pasting the code, changing the name from Bitcoin to ZEC or to Litecoin, and then running it. And it's that simple.
That's good, mate. It sort of touches on my next question that I had. What advantage does XBTC have as a product over, you know, potential competitors?
Good question. To give a more direct comparison, for example, a lot of people ask me like, "Oh, is Polka BTC a competitor to ChainX, or is Ren BTC a competitor to ChainX?" That depends on your perspective. Again, I like to look at the Polkadot ecology as this Knights of Camelot type of thing, where you have, you know, one brotherhood or sisterhood, if you will, this one community that together creates a very strong blockchain, and not necessarily fights amongst themselves. Polka BTC is specifically in its core is very similar to ChainX, and the team behind it, Interlay, created a sort of protocol called Xclaim to make this whole bridging thing as trustless and as automated as possible. And we recognize this, and we're also using Xclaim. We are using that same protocol, we just adapted it a little bit for our purposes. So when people ask me, what is the difference between Polka BTC and ChainX? I say, well, for the bridging part, nothing. ChainX cannot bridge all the BTC that people want to bridge. Polka BTC cannot bridge all the BTC that people want to bridge. So having these two, you know, projects working together kind of shares the burden. With ChainX, we're trying not just to bridge it, but we're creating a sort of DeFi platform for Bitcoin in which you can deposit your BTC and you can use that XBTC directly in all sorts of derivatives or options or as mortgages, etc., etc. Kind of like an extension of Bitcoin connected to the Polkadot ecosystem, in which it becomes even larger in what BTC can be used for.
That's the most diplomatic answer that I've heard. But that's great, mate. I see a few advantages. One, like you mentioned before, is that you guys are built on substrate, so you know you don't have to deal with some of the gas fees. You've mentioned community involvement of the community, so I think you guys are positioned to have the advantage for what you guys want to do. How does one get involved with the ChainX community?
I guess it starts with buying a PCX, but no, jokes aside, we have a lovely little Telegram group, and I welcome everybody to just join in and see a little conversation with the wonderful people that are in there and ask your questions. And I personally will be happy to answer them for you. I'm in there, you know, during my waking hours. And when I'm at sleep, I know that there is a lot of other people that are more than happy to answer questions or help people along. And really, you know, going through the website, going through the white paper, please do that, because it makes, you know, it answers the simple questions. But any question you have or anything you want to know, you know, drop in the Telegram, and there's loads of people that want to help you out. I think that's the best way to start it.
Thank you, Alex, for joining us today. I absolutely love the analogies. It really did help me sort of, you know, really feel the passion that you have for ChainX.
Thank you for having me.
For those who want to get involved, all the links are in the description for both ChainX and ADAPTCrypto. And I just want to say thank you for joining us for this absolute gem. It's a very unique project, and I implore you to do your own research. Just a reminder, none of this is financial advice. It is all for educational purposes only. However, it is a very exciting project within the crypto space. If you like our content and want to see more, please like, subscribe, turn notifications on, and I'll do my best to always keep you guys informed and ahead of the curve. See you later.